Hello and welcome back to iCalculator. Today we're going to unravel the complexities of stamp duty in Singapore. Our goal is to provide a clear and comprehensive understanding of this important aspect of property and share transactions. Let's look at what we'll cover in today's video. First, we'll explain what stamp duty is and its general purpose in Singapore. Then, we'll delve into the different types of transactions that incur stamp duty. We'll also discuss the calculation methods for stamp duty on various transactions. Lastly, we'll touch upon the exemptions and reliefs available under stamp duty regulations. Let's start with understanding what stamp duty is in the context of Singapore's tax system. Stamp duty is a form of tax imposed on legal documents, typically those related to the transfer of assets like property and shares. In Singapore, it represents a significant part of the fiscal policy, contributing to the national revenue. It's not just a revenue-generating tool, but also a way to regulate the property market, discouraging speculative buying and selling. Stamp duty applies to a wide range of transactions, ensuring fair taxation while supporting government initiatives. Now that we understand the basics of stamp duty, let's delve into the specific transactions that are liable for this duty in Singapore. Stamp duty is most commonly associated with property transactions. This includes buying and selling of residential and commercial properties, as well as the leasing of such properties. In addition to real estate, it also applies to the transfer of shares or stocks. Each type of transaction has its own set of rules and rates, reflecting the dynamic nature of the market and the government's approach to different types of asset transfers. Understanding which transactions are subject to stamp duty is crucial for anyone involved in property dealing or share trading. With an understanding of the transactions subject to stamp duty, let's now explore how this duty is calculated for property purchases, leases, and share transfers. The calculation of stamp duty varies depending on the nature of the transaction. For property purchases, it is typically based on the purchase price or market value of the property, whichever is higher. For share transfers, the duty is calculated based on the value of the shares transferred. We'll go through these methods to give you a clearer picture of how much stamp duty might be owed in various scenarios. Having discussed how stamp duty is calculated, let's now explore the exemptions and reliefs that can apply to these transactions. There are specific exemptions and reliefs available under the stamp duty framework, designed to alleviate the tax burden in certain situations. These can include exemptions for particular types of property transactions and reliefs for certain conditions, such as the transfer of property between family members. We'll cover these exemptions to help you understand when stamp duty may be reduced or not applicable. For more detailed insights into stamp duty and other aspects of Singapore's tax system, visit our iCalculator website. We ensure our resources are constantly updated, providing accurate and relevant information. Check out our website, linked in the description below, for comprehensive guides and tools. That concludes our video on understanding stamp duty in Singapore. You should now have a clearer understanding of what stamp duty is, the transactions it applies to, how it's calculated, and the available exemptions and reliefs. Stay tuned for our next video, where we will delve into property and motor vehicle taxes in Singapore. We hope you found this video helpful. If you did, be sure to subscribe to our channel, like this video, and switch on notifications to ensure you never miss an update.